Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. Today we're taking a look at 3 soaring stocks to consider buying for long-term AI and nuclear energy growth. And those 3 stocks are BWX Technologies, which trades on the ticker BWXT, Vistra, which trades on the ticker VST, and then Oklo or Oklo, depending on how you pronounce it. But before we get everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page for a look into our services, portfolios, and more. So as I record this, the market's going pretty wild. This is Thursday, like midday Thursday afternoon, and the 3 stocks I'm talking about are going higher as well at the moment. So we're gonna jump into the broader case for AI and the broader nuclear bet as well there before we jump into these 3 stocks. So the basic idea is that the U.S. wants to remain an energy-independent, dynamic, power-hungry economy while slowly trying to use less fossil fuels. Large data centers can consume roughly the same amount of electricity as a mid-sized city. And with this in mind, Amazon, Google, Microsoft, and tons of other tech companies, but those 3 tech companies in particular have made some splashy nuclear power deals in 2024. And that's the bull case in the nutshell. So the build out of nuclear power economy will cost tens of trillions of dollars and take decades, even though nuclear has supplied around 20% of U.S. electricity for the last 30 years. It currently supplies about 10% of the global electricity demand. The U.S. government has rolled out multiple efforts to support the U.S. nuclear industry's resurgence and pledged to triple nuclear capacity by 2050. And it's not just the U.S., China, India, and tons of other key economies around the globe are going all in on nuclear energy as well. And the basic pitch is that now AI is going to use more energy than ever. And as we said up top, it can consume as much electricity as a mid-sized city. Some of these large data centers, the estimate is that generative AI platforms such as ChatGPT can use 10 times the amount of energy compared to a regular Google search. Data centers could account for 11% of U.S. electricity demand by just as soon as 2030 versus about 4.5% today. So that's the power driving these tech companies to go all in on nuclear power as they're trying to slowly lessen the burden of using fossil fuels to power these data centers. So that's the basic point of all of this. And a lot of these stocks have gone hyperbolic already in 2024, including some of the stocks we're talking about today. But if you're a longer term investor, it still seems like even though maybe you could face some near term pullbacks and volatility, that these 3 stocks we're talking about today are good long term bets on both the growth of AI and the nuclear power sector to power those AI investments for years and possibly decades to come. And the first of those 3 stocks we're looking at today is BWX Technologies, which trades on the ticker BWXT. So the company is a top supplier of nuclear technology, components, and fuel to the U.S. government, including U.S. naval submarines and aircrafts. It's also actively growing its commercial nuclear power segment and other non-defense units. The Virginia-headquartered firm's portfolio spans clean energy, environmental restoration, space exploration, and beyond. One of its production facilities in Canada is the largest commercial nuclear equipment manufacturing facilities on the planet, and it's currently expanding that plant to, quote, support ongoing and anticipated customer investments in small modular reactors, traditional large-scale nuclear and advanced reactors in Canada and around the globe. The company in late April was selected as the first qualified supply chain company to join the GE Vernova nuclear supplier group. In June, it was awarded the second phase of a contract with Wyoming Energy Authority to access the viable deployment of rolling out small modular reactors, so those SMRs in the state. It's also landed some contracts with the Bill Gates-backed SMR company TerraPower. And it's working currently with the U.S. Defense Department on a cutting-edge micro-nuclear reactor. So that's all of BWXT's kind of backdrop for all of this. So the company reported another beat and raise quarter in the third quarter, which was in early November. The company also provided preliminary 2025 guidance with calling for mid to high single-digit growth for revenue, non-GAAP earnings, and adjusted EBITDA growth. The company's CEO said at the time that the nuclear energy industry is enjoying unprecedented customer and market interest with tangible investments in nuclear solutions by end users across our key defense, commercial, power, and medical markets. So that's the backdrop there. The company's projected to grow its revenue by 8% in 2024 and another 6% next year to get to about $2.9 billion, to boost its adjusted earnings by 7% this year and then another 6% next year. It's also easily topped our bottom line estimates for 7 quarters running. Overall, the stock's up about 340% in the last 10 years to outpace the S&P 500, which is up about 200%, and more than double its industry, which is up 150%. So BWXT broke out to new highs last summer, and it's up 74% year to date, roughly. The stock is now at new highs after avoiding testing its 21-day moving average recently, and it's still trading below some of its more overbought RSI levels over the last year. That said, like all the 3 of the stocks we're talking about today in the market itself, it could face some near-term selling pressure based on profit taking as the market has gone on an impressive run in 2024 and since the Trump election. And we have to remember also a lot of these runs are off of those 2022 lows. So we're on an impressive 2-year run and a big run in 2024. So any near-term selling for all 3 of these stocks would likely mark a good entry point for both traders and longer-term investors. That said, despite trading at its all-time highs, BWXT trades at a 42% discount to its industry with a PEG ratio of 4.1, or excuse me, not to its industry, to its own highs. So despite trading at all-time highs in terms of price, if you trade like its PEG ratio, which factors in its earnings growth outlook, it's trading at a 42% discount to its highs at 4.1. On top of that, 6 of the 8 brokerage recommendations that we have are strong buys, and its upward earnings revisions for its near-term outlook for its earnings growth help it land a Zacks rank number 2 buy at the moment. And now we're going to move on to Oklo or Oklo, depending on how you pronounce it. I've heard different people, even from inside the company, kind of pronounce it differently. So I'm going to call it Oklo, and it's a next-generation nuclear fission company that went public back in May via a SPAC with the help of Sam Altman, who is famous for OpenAI and ChatGPT fame. Oklo is building what it calls small-scale modern fission powerhouses designed to be easily repeatable, along with our model of selling power directly to customers, allows us to accelerate timelines, reduce complexity, and scale to meet demand. So it's aiming to develop between 15 megawatt and 50 megawatt reactors that it will build on-site to deliver cost-effective and reliable power at lower financing risks. So their long-term goal is to kind of be a on-site power plant to, say, data centers and other areas that need reliable nuclear power. One of its customers, Prometheus Hyperscale, said that it was excited to partner with Oklo to revolutionize how we power our operations. That's the pitch. It's still a pre-revenue company, so it's a big home run swing, but it obtained a site use permit from the U.S. Energy Department back in 2019, and the company believes that 2024 is going to mark a historic pivot period for the new age of nuclear power as big tech and the U.S. government go all in on it to help power the AI boom and the economy going forward. In the third quarter, it said it landed power purchase letters of intent that were up 200% since its business combination that it announced back in 2023. The wave of deals between major tech companies and nuclear energy companies kind of cements that bull case that Oklo is trying to ride higher and higher. The company also, the CEO said that they're planning on being able to deploy advanced reactors by 2027. So that's very soon. We'll see if it gets to that point. It's also worth noting that President-elect Donald Trump over this past weekend picked the Liberty Energy CEO Chris Wright as his nominee for the energy secretary. And it's worth noting that Wright helped lead the U.S. shale boom and currently serves on the board of Oklo. So Trump, some people might be a little nervous that the energy transition and nuclear power might kind of fall to the wayside as he focuses on what you hear a lot on the campaign is drilling for more oil. That certainly doesn't seem to be the case since Trump picked a guy who's on the board of a nuclear energy company. He also said in his when he put Wright as the energy secretary, or put out the note, that he wants to help the U.S. drive energy dominance, which will drive down inflation and win the AI arms race. So that sentence right there kind of leads me to believe that they're going to go all in on as much power, and especially that doesn't mean that they're not going to do as much as they can with nuclear. So it seems like any fears that maybe Trump's going to cut back on some of the nuclear age doesn't seem to fly with what he said recently and who he's picked as his energy secretary, since he's on the board of a next-gen nuclear energy company that we're talking about right now. Once again, it is, though, a speculative company. It's pre-revenue. It reported an adjusted loss of 8 cents per share in Q3, which matched our Zach's estimate. We're currently calling for a fiscal 2024 loss of 54 cents per share, and then cutting that to a loss of 31 cents per share next year. And obviously, there's not many analysts covering the company at the moment, so some of these estimates can vary pretty significantly, maybe by next week or next month. But that's just what we know. It's a pre-revenue company, still losing money. It's still heavily shorted at the moment, around 20% of the public float at the end of October. But its balance sheet's really impressive. It closed Q3 with $231 million in cash and equivalents, almost $300 million in total assets versus just $31 million in total liabilities. The stock did initially tumble right after its New York Stock Exchange debut in early May, after it went public via that SPAC, as I mentioned, that was backed by Sam Altman. It then kind of continued to dive until early September, and since then it's gone on a massive run. So it's up now 35% since its IPO, but it's up over 300% since September 1st. It held its ground recently at its highs from May, and then it climbed above its 21-day moving average once again. As I record this, it's up about 17% through midday trading on Thursday. It's still about 12% below its all-time highs, so it's trading at under $25 or around $25 per share, and it's still sitting at roughly neutral RSI levels and way below the super overheated levels it was at just a few weeks ago. And it currently lands a Zacks rank number 2 buy. And now we're going to move on to the last of our 3 companies we're talking about today, and that is Vistra, which trades in the ticker VST. It's thriving as Wall Street embraces companies that will power the U.S. economy as they slowly try to transition away from fossil fuels, at the same time that artificial intelligence is leading to soaring energy demand. So this is the bull case for all of these stocks. Vistra is the largest competitive power generator in the country, and it's gone all in on nuclear recently. So let's kind of dive into more of what the company does. It's integrated retail electricity and power generation company. Its portfolio includes natural gas and coal, which will remain vital for a long time coming, especially natural gas, even as we ramp up on nuclear energy investment. It also has a solar and battery storage units. It boosted its next gen, or its zero carbon portfolio in going all in on nuclear when it bought Energy Harbor back in March. It added a ton more nuclear power to its fleet. It says it currently owns 4 reactors, or 4 generation facilities, nuclear generation facilities, generating enough baseload electricity to power over 3 million homes in the U.S. Overall, it now owns what it says is the second largest competitive nuclear fleet and boasts the second largest energy storage capacity in the country. So that's the bull case for why it is a big player in this energy transition field. Once again, I haven't mentioned it actually so far, but the Inflation Reduction Act is specifically propping up the nuclear energy industry, which is helping the whole space, but especially companies like Vistra and Constellation Energy. So that's really important. But overall, it serves approximately 5 million residential, commercial, and industrial retail customers across 20 states. It's based in Texas, which is the energy hub of the United States. And recently, their governor, Greg Abbott, this was earlier this week, put out a report that the state's going to try to also go all in on nuclear power as well to add to its natural gas and oil and solar and wind capacity. Vistra is projected to grow its revenue by 33% in 2024 and another 13% next year to reach over $22 billion. in fiscal 2025. It's also projected to grow its adjusted earnings by nearly 40% this year and then another 24% next year. Its earnings estimates have climbed recently over the last week, and they're up solidly from where they were several months ago. That said, it still does land a Zacks ranked number 3 hold at the moment. And then in terms of its performance, it's gone on a wild run. It's up 325% in 2024, topping NVIDIA. It's actually currently the top S&P 500 performer. That market-crushing performance is part of a 700% run in the last 3 years. The stock, like all three of these, might be a little overheated. It's not trading well above its 21-day moving average at all-time highs. It was up over 5% the last time I looked, midday or through midday on Thursday. Once again, though, so if you're a trader or a longer-term investor, maybe you want to wait for it to pull back again to its 21-day moving average. But if you're a really long-term investor trying to get in and out of these stocks at the exact right point, is not probably the best game to play, but it certainly is a little bit overheated in the near term. But overall, there's a ton of momentum behind a lot of its various businesses. It's going to be a big player in powering the AI age. It also pays a dividend, and it's trading at a 23% discount to the utilities sector with a PEG ratio of 1.1. So it's a solid investment long-term, as all three of these stocks are. And it's worth noting that I own all three of these in the Zacks Alternative Energy Innovators portfolio. So that does it for me in this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.